Regarding tomorrow's videos, I'll only be doing the indices videos at this stage. And what I'll do is I'll put all the indices into one video because I've got some commercial plumbing happening on the road very early in the morning, and they'll be going most of the day, and it's going to be really noisy. So I'm just going to do the best I can in the morning. When that noise starts, then I'll just have to stop. So just to let you know that. Yeah, so I'll do all the indices into one video, and I'll see what else I can do. Yeah. Anyway, I don't think we're going to miss much because we're basically in a series of wave fours going across this little top here, which I'll explain. So all of this week is going to be up, down, up, down, up, down in a series of fours and fives before pushing up. I did want to have a look at the SPX on the weekly chart here, just to, because we talked about the volume through here a fair bit, last week, I think. Not a lot, didn't overdo it, but the week finished on higher volume with a higher price. So that's fantastic because that really confirms the trend. If we got to move up and we had lower volume, then that would have been divergence, and then that would have been a bit of a concern. So that's good. And yeah, it is really the sort of the mid caps and the lower stocks that are holding us down. We can see that. If I just go to, where's my low volatility stuff here? I think that's the low volatility market, which I do have 5 waves up here. We've been looking for a pullback in this particular move here. But when I have a look at the mid cap low volatility, I think it could be this one here actually. Yeah, so this one here, it got support during the week, but it's just sort of a bit softer in this. So we can see that money is really flowing into high quality stocks, be it tech or be it, brand names and so on, the normal sort of thing. Yeah, so anyway, positive. So let's just have a look at the situation with the S&P and the Nasdaq is that I know the market's moving up, but I prefer to track a bearish count to the upside because that will keep us on our toes. If I go into a bullish count and start putting targets, way up there, that's very exciting and exhilarating and so on, but it doesn't really keep us grounded. So we're going to just keep working the bearish counts to the upside. Every now and again, we'll look at the bullish counts for the market, so we've got sort of some idea where they are. But with the bearish counts to the upside, what we're looking at the moment with the S&P here is an A wave, an ABC for the B wave, and then up for the C wave. So we're looking for 5 waves up here. This is the most minimal basic count that I could put into play, and that would give me wave 1 here, 2 here, 3, 4, and 5, and finish on this is 5 waves here, finish on the top there at the 61.8%. With the Nasdaq, I've got a count that can give us another move down and then another move to the upside. So what I need to do is I need to look at the most minimalist count, which will take us to the 61.8%, the 4,300. And if we do get support on the 4,300, the top of group 1, well, then I know that we're highly likely to move to the 4-5 at that point, and that would give us our extra leg at that point. But we'd be above the 61.8% at that point, which is no big deal. We'll just move up to the 78.6. But it's safer to go step by step to the upside rather than, gallop off into the sunset, so to speak. So, yeah, so that's basically what we're doing here. Now, I'll just go to the Nasdaq. This is the bullish count here where we can look at the A, the B, and the C for wave 2. But basically the other side to this is putting this over here and putting this over here. And, obviously that paints a completely different picture at that point, doesn't it? So we need to kind of understand, what moves can we have up here? We know that some of the big tech stocks like Nvidia and Apple have been doing very well, and, they're pushing much higher and so on. And as I've mentioned before, with a lot of these stocks is that, Sorry to bore you to death, but basically there's some stocks that, you know, have come quite high here that could even make a high up here, make a new high here, you know, and then they would have a, you know, a nice ABC pullback in that case. And some of the stocks that have just sort of hovered to the 30, 40, 50%, well, then they can make a new low when this pulls back. You know, that's kind of what I'm thinking. Now, that may be right or wrong, but that's kind of what I'm seeing at the moment. And obviously things change, and I'll need to change with that. You know, even to remain the same in life, we have to change to maintain the same. So anyway, so this, let me go here to this one. Let's just bring that back in here a bit. So I just want to talk about this to the Nasdaq, because the Nasdaq is really the one that's leading to the upside. So we've got to kind of look to this one, to the most of the upside. So now there's a couple of ways we can look at this here. I can go if I go to the max to the upside, that means that I'll look at this as wave A and B here, and then 1 and 2 and 1 and 2, and then a third wave here. We've got 1, 2, 1, 2. A few 3s and 4s, and then we'll drill into 3, 4, and 5 for the third wave, the fourth wave, and the fifth wave here. That would take us to the maximum to the upside. Beyond that, we can turn bullish at that point, but obviously the market's going to be quite high at that point, and so on. But as I mentioned too before this little journey started here, is that we're highly likely to push up, and when we do push up, it's important not to get, you know, emotionally sold on the fact that, you know, not the facts, but not to get emotionally sold that we're in a bullish market. We'll still, yes, we are going up, but we'll treat it as a bear market rally, because that way we're technically and emotionally safe at that point, you know, in this journey. It's not like, you know, we can, you know, we can look at this as the A, the B, and the C wave here, and continue to move up here, you know, and we are long in stocks. It's not like we're doing anything sort of wrong at the moment, you know. So we're doing all the right things. I'm just trying to keep grounded and balanced in all of this. So, because I still see some stocks like the Russell in negative situations, you know, so that sort of haunts me a little bit. So anyway, this is to the max to the upside here. Now, if I looked at wave B here, I looked at this as an A, and then a B and a C wave here for the larger A wave here, which we have been doing as well. That would give me an A and a B here, and then that would just give me 1, 2, 3, 4, 5 up here. So this would give me that extra leg on the S&P at that particular point in time. So we're just going to go step by step all the time as we continue to move to the upside, and we'll keep talking about these counts, and you can pull them apart and criticize them. I accept criticism as long as it's, you know, constructive and helps others. Then it's valuable, isn't it? So yeah. So anyway, that's that. Sorry for dragging that on a bit. If I go to the bearish count here, we'll be looking at it slightly differently here, where we've got the A wave here. If I can just bring some more in here. So in this case, from the low here, we can look at it as an ABC for the A wave, and then the B wave here, and then counting this up as 1, 2, and then 1, 2, 3, 4, 5 for the third, a fourth, and a fifth here. So I put the fourth and the fifth here in this case. So that takes us up a bit higher. So yeah, so that's that. And yeah, like I said, we can look at it as a bullish count. We don't really need to go there just yet. So I'm just going to go to the 1000 tick here for the next moment. So okay, so I'm just going to leave that here for a second. And we're going to tune this back in with the SP 500 here for a moment. So I'll just leave that. I just might bring in a bit more data here on that, just so we've got that there. Because when we spoke last week, we were looking at 1 and 2, and then 3 and 4 and 5 up here, you know. well, I've got 3 here and then 4 and then 5. On the S&P, I was looking at this as being a top here, but in this one here, we're going to look at it as 4 and then 5 to the upside. That will be the extra wave that we're talking about here. So in this case, we've got 1, 2, 3, 4, 5 to here, 5 waves up to the 61.8%. But this wave 4 pulling back and wave 5 up here, that will be this extra one coming in from this wave 3, 4, and 5 coming up. So I'll probably need to readjust some moves in here for that to get this extra leg here and here. So our job really, as far as I can see, is we're doing all the right things at the right time, and our target is the 4-3 still. We are currently at the 4-2. Now, each one of these levels, 1, 2, and 3 that make up minor group 1 are all important. And we can see that we've had this double top here before. Double tops are not the end of the trend. So now we're piercing through that. And yeah, it's going to, you know, do its little wiggling around and until it becomes support and then move to the upside. Now, in that little wiggling around in here to become support, there's two degrees of wave 4s in there that need to be navigated in that space, and that's where we're going to be most of the week, is just really being above and below that level. So we're not really going to see much of a trend this week in all of this. So that said, I think we can go, where are we here? I'm not sure. I'll just go into the 20. I did look at this morning. That's more of a bullish count, so I won't go there just yet. That's still part of the bullish count. Let's go to the 5. So this is sort of where we were this is where we were last week. So I know it's a bit tricky to see with all the lines that I put on the chart, but when I open it up, I kind of need them a little bit. So from here, we're looking at blue 1 and blue 2, and then we're going to blue 3 up here, then blue 4 and blue 5 up to the 4-3. That's our minimum conservative bearish count in the market. I do think we may need to take it up another level, but we'll get there when we get there with that. And let's just see how we go with this. I mean, I think we're all good at this point, so just checking. So we got from 2 here, we got 1 and 2, and then we've got 3 and 4 here, and then we've got 5 of 3 and then 4 here. So we've got these 2 degrees of wave 4 here, and our main number is the 4-2 here. So because we've reacted here, it's highly likely we're going to get this pattern here, the arrival, the reaction, the first high above the level, the ABC pattern for wave 4, and then pushing up into wave 5 of 5 up here. But we may end up needing, we may end up viewing this as a wave 3 up here, but we can't confirm that just yet. But it does appear to be the case when I look at the Nasdaq, but I need to double check that and drill into that. And the way that I drill into that is by looking at Amazon, Apple, and going back over their accounts and checking and seeing what I can pull together, what's reasonable and what's not, and trying to get some consensus from all of those, because those stocks are the ones that are going to be, you know, correcting it at this point in time. So yeah, so I don't think this week we're going to, you know, this will be, Monday can come down a little bit here and then close higher. Tuesday can be higher here. Wednesday and Thursday could be this, or this could all happen in one day. I'm not quite sure, but there's a fair bit of time to go here with all of this. It, you know, could be 2 sessions before pushing up. So the takeaway today is patience really across this level, you know, across this period here. So if you're long, the idea is not to push any buttons really, it's just to stay long and to be patient and keep the stop out of the way. Of course, you can always, you know, take money off and put it back here, take money off and put it back here. So between 20 here, 220 and 30, taking money off and then putting it back anywhere under the 200 here to pick up a bit. You know, this wave 4 may pull back to this wave 4. Normally they're sort of up on an angle a little bit here. So, but that's generally the gist of it here. You know, so we got that wave 3 in there at the moment. So if we go to 1000 ticks where it'll be a little bit clearer in here, the 38.2% for this wave 4 here is at the lower end of group 2. So we've got group 1 above and group 2 below. That's our swing range for being at this number. And once we get to here, then there'll be 5 waves in that move, and then there'll be 3 waves in this move here before heading higher in that point. This blue one technically should be, you know, 60% bigger than this one. This one here, is it finished yet? Here, I was thinking that we may end up looking at this here as, let me just label this, but I'm just sort of guessing a little bit here. I need to do a little bit more work on this, but I was thinking something like this here as the A wave here, the A, B, C for the B wave, down for 1, back for 2, 3, 4, 5 down here, something of that nature. If it takes the top out here, then that creates the long trade at that point. And then you would want to take some off the table at this point if you're thinking of that. You know, I mean, if you're getting in here, take it all off here. But if you've got other stuff back in over here, then you can put that back in over here for that, you know. And then we just also build in through here as well, you know, on 4 and 1, 2, and 3. But that's basically the pathway for everything at this point. So yeah, we do have some positions in here. So just we don't want to get stopped out at this particular point. I'll just have a look at the 100 ticks in here for a moment. So we've got wave 1 and 2 here, 1 and 2 and 3 and 4 that can pull back to the lower end of group 2, then up's all the same. So don't need to do too much at this point. I'll just put these in over here, that will be helpful. Don't need those for a while. Get rid of those. So yeah, that's where we are at the moment. That could be wave 2 over here. We don't know that yet. Let's push up to here. How long was that blue wave 1? I mean, the extension's not really in the third. I mean, it is, and it's got. I mean, it's definitely got form in there. So we could look at, you know, wave 5, blue wave 5 being roughly the same size as blue wave 1 here. You know, take that with a pinch of salt, and then, you know, wherever that is here, we kind of look to the closest largest number. So we'll see how it builds here. This wave 2 was quite complex, so wave 4 might be simple. It might trick us a little bit, you know. 1 and 2 and 1 and 2 here were quite complex. Let's just see how this wave 4 goes. That should be a bit of a DNA footprint for this wave 4 over here as well in that. So if it just shoots straight up from there, then that wave 4 can just go there, and then we could look at that as simple being an A, B, and C down here, you know. So that will be sort of interesting at that point. Then this one could do the same as well at that point. And it may not pull all the way back down here as well. It could just be sort of up here as well. So we just got to keep a bit of an eye on them. So that's the S&P. I mean, the other interesting thing too is that we've got the US dollar index doing the same thing as well here. So perhaps they'll even come quite close to topping out together in all of this. And the Nasdaq here, so once again, we're just looking at wave 1 over here and wave 2 here. Much better range in this market because it's leading, you know, it's leading to the upside. The wave 4 can pull back here. We're going to look at this as wave 1 and 2 and 3 and 4. I'm not really happy with that, but I'm just dragging it into the S&P. I can see it can be counted differently as well, but it's kind of important to keep them together a bit. The main point here, though, is that it can pull down to the lower end of group 2. That's the 38.2% retracement level. So group 2 is 13,650 and the 13,720 and the 13,800 here. it's just going to fluff around this number here for quite some time because we're in a series of 4s and 5s here. That's the takeaway. We'll end up later at the end of the week, we'll end up higher, right? But it's going to be a pretty emotional journey. So as long as you're prepared for that, then that's good. You can buy here if you wanted to, sell up here, buy back over here. You know, if you got long trades in the market, I did notice that on the 100 ticks here, I think it was, that we did start to capture this trend at the beginning over here for that. Oh no, it wasn't that one. It must have been the 1000 then. It was somewhere in there. Not even in that one. 5 maybe. Oh, here it was, right. Yeah, so we had talked about building in over here, all of this, so somewhere along the way. But anyway, I've been a bit lazy with them, but that's all good at this point. We can just see if this trend line is going to be any useful over here. Well, yeah, see, it may not come back because that's what it does. It just sits on the trend line, you know, so it could just go straight up from here. As I mentioned in the stocks video with this here, if you wanted to go long here, let's just say that is it going to go down further? Is it going to go up from here? So this is the 13 here. I'll just give that a bit of gravity in terms of its so the 10 here, so 13,810, which is the previous high here. If that high becomes the support, then you can build in at that point. I can see we can count this in different ways down here. So it may drop down to here, down to the 13,650. That's probably the worst it could do. Otherwise, if it goes on to, if you get a nice classic trading levels pattern on 30,810, then a small position on there, and then another one at 20, and then another one at 30, and another one at 50. It'll give you a hard time at 9, of course, but it'll eventually end up here. Any trades that you put on here, you really want to take them off here because the other wave 4 is going to come back and bite you at that point. You know, it's going to be wave 3 here, and then a blue wave 4 over here. So really, that's that. If you've got trades in here, then you can still work it over here. In that, you know, take some money off the top over here, put it back anywhere back under the 13.8 over here for that, and then continue to build up over here. So we should end up, you know, further up here on all of that. So that's all pretty good. Yeah, so obviously, as I said last week, the Nasdaq is the one to trade rather than the Russell or the Dow Jones and so on. It's just got more range in it, and that still holds. So the Russell here, because we know the small and the mid caps are the ones that are not seeing any volume come into them. So with the Russell here, we're looking for it to move up. We know that it's sluggish. So we've got wave 1 ABC for 2 here, wave 1 and 2. I was looking at this as 1, 2, 3, 4, 5 for the wave 3 here with an A wave, a B wave and a C wave here. We can have another little move down here to give us that 1, 2, 3, 4, 5 here, and then a push up at that point. And I mean, this is just going to be pretty laborious at this point. It probably won't even go, probably the 1810 will probably be about it. And then it's going to struggle here again for this before pushing up here. So it's going to be a hard slog here. You know, much prefer to go with the Nasdaq or some other market that's some individual stock or something that's moving. But yeah, it's still, you know, I mean, what it done last week, it pushed up and made new highs, right? And then it's come back, made new highs and come back and tested to find itself support in group 2 here of 18. So 18, we got group 1 and group 2 here. So it's just basically testing the, you know, the floor, walking up the stairs, so to speak. So yeah, that's sort of where it is at the moment. So I don't see it, ranging up here. I mean, it will push up, but yeah, it's a hard slog. And the DJ here as well. So we're looking at this in a couple of different ways. I can look at this as wave 2 or wave 4 here. We can look at this as wave 1 here and wave 2 to come back here. We could probably even look at this as wave 4 over here as well for this. Over here, but it's still, whichever way you look at this, we should still be pushing up here. Now, this move here, this little consolidation in here looks a little bit overlapping wave structures. So this would be the 61.8% coming back into this area here. So if you want to go along here, you need that 33,500 as a little classic trading levels pattern in here. Or take the high out here, but support on this 500 here, because that, you know, that's what it's trying to do. It's trying to get support on there. Is it support yet? No. Should you buy back here? You could, but the risk is just higher at that point. You probably get away with it because we're looking for the market generally to push up higher. So it should be pretty safe to buy it back in the box here, but I wouldn't overdo it. I'd keep it as small as possible. And then with the view of adding on to say 400, then 500, then 600, then 700 and building in that way with it. But I just don't see the range here. I mean, it could just sort of push off nicely, and I expect it should, but it's just not going to cover the same range as the other markets at this point. Alrighty, I'm going to leave it at that. Thanks for tuning in. Cheers.